Hi, and welcome to this week's Market Insights. We've got a busy lineup of key US economic data releases this week, plus some important developments in global trade tensions. So let's break down what to watch and how it could impact the markets in the weeks ahead. Now, first up, on the 25th of September at 3:30 p.m, GMT +3, the US will release its durable goods orders data. Now, back in July, durable goods orders fell by 2.8% from the previous month, extending June's very sharp 9.4% slump. Now, that said, the decline was slightly smaller than the 4% drop that the markets had expected. The weakness followed a period of softer demand as firms had already front-loaded imports in May to avoid aggressive US tariffs. Now, the smaller than expected decline gave the dollar temporary support. Analysts now expect another fall in August, but likely less severe than July's drop. The key question is whether a rebound will appear and how strong it could be. Traders should stay very, very alert. Alongside the durable goods data, traders will also keep an eye on the final reading of US GDP growth. Now, according to second estimates, the US economy expanded at an annualized pace of 3.3% in Q2 2025, bouncing back strongly from the 0.5% contraction in Q1. Now, the figure was revised slightly higher from the initial 3% estimate, thanks to stronger investment and consumer spending. The August release provided a boost to the dollar, but also triggered sharp volatility. If the final Q2 figure differs from the second estimate, we could see significant swings across USD pairs. Don't forget your risk management techniques. Now, the very next day brings another set of high impact numbers that the Fed watches closely. On the 26th of September, attention will shift to the PCE price index, along with personal income and spending data, all due at 3:30 p.m. GMT +3. Now, in July, PCE prices rose 2.6% year on year, unchanged from June and exactly in line with expectations. Personal income increased by 0.4% month on month, marking the second straight rise, mainly driven by gains in wages and employee compensation. Personal spending grew 0.5%, the strongest in 4 months, reflecting resilience from US consumers despite high borrowing costs and ongoing economic uncertainty. Now, because the numbers match expectations, the release initially created a little bit of market hesitation, but the dollar eventually weakened later in that session. Now, once again, risk management will be crucial, so do pay close attention to those numbers when they come out. Just to wrap up this week is trade tensions and a quick update on the various factors at play there. Keep an eye on potential developments in US trade negotiations, of course, including agreements with India, discussions with the EU regarding tariffs on India and China, and obviously their own US ongoing talks with China. Any breakthrough, alternatively a setback, could add to some serious market volatility. So that's it for this week in Market Insights. There's so many drivers in play. Volatility is likely to stay high across major assets, so don't forget those risk management techniques. Stay informed. Check out the news and analysis section on the FX Open website for real-time updates. And as ever, we wish you luck with your trading in the week ahead. Bye for now.